And we are live. For those, welcome to the floor. We'd love to have you here because you're the only ones that are going to like us all year. That's a wonderful treat for us. And just introduce yourself for the record, you know, who you represent, and then the floor is yours.
Great. Well, thank you very much for the invitation. My name is Ian Davis. I'm president of the Vermont Captive Insurance Association. And I've had the privilege of being in front of this committee in a few different roles, actually. I started as president in August of this past year, but have worked in the captive insurance industry here in Vermont for the last 10 years. First with the Department of Economic Development, helping to market and promote the state.
Okay,
Yeah.
that's all right.
And most recently, with M&T Bank. And I'm actually kind of a product, if you will, of the captive industry. My mom was the first president of BCIA back in the late 90s. So it's very much a full circle moment for me to be now serving in this role, if you will. But, you know, truly, I've seen firsthand how important this industry is to Vermont, to its economy, and to its reputation with its business community. I know I'll be back in front of this committee at some point to talk about the captive bill.
I believe the captive bill got sent to us today. Did it come down?
Package came down, yeah.
Then it arrived about the time you did.
Wonderful. Well, I figured I'd preserve kind of some of my comments about, how that bill was developed and it's contained with it for that time. But with, the few minutes that I have, I just wanted to provide a few quick updates and then get to Julie, who is vice chair of our board and a Vermont domiciled captive owner. Very, interested to have you hear from her directly. As to why she chooses to be in Vermont and the work that her risk retention group does. So just very quickly, today the association is really focused on three major priorities. We have, we've referred to them as core pillars, I should say, but strengthening our advocacy work, both here in Vermont, more so at the federal level and within the National Association of Insurance Commissioners, the NAIC. As you can imagine, as the largest captive trade association representing the largest domicile in the world.
We are still. Worked for that for a long time.
We have, yeah. And so, we really have the credibility and the responsibility to lead on all things, legislative and regulatory things that touch not just Vermont's captive industry, but the broader industry as well. So that remains a key area of focus for us. The second would be just expanding our year-round learning and professional development opportunities outside of just our annual conference, which, as you'll recall, is our signature event that we do every year. This past year we had 1,147 attendees here in Burlington for course of 4 days. And that remains the association's kind of biggest strategic asset, if you will, but we're very interested in, kind of building out our educational offerings to meet members, needs throughout the course of the year. So that's a key area of focus for us as well. And then lastly would be, we refer to as member engagement. And by that, we mean kind of meeting members where they are at across the country. So we are an association that represents 430 organizations, but that is a much larger number when you talk about the number of individuals who work for those member companies. And by and large, the vast majority of the 3,000 or so individual members are in major metros around the country. And so we want to have a presence in those markets where there's a concentration of membership, but more importantly for Vermont, in areas where we're seeing new captive activity. So we, this past year, launched what we refer to as chapters, so similar to like an alumni network, if you will, in Chicago, and we'll soon be launching a Philadelphia chapter. So there's a number of Vermont domiciled captives today who have physical presence in those markets where those companies are headquartered. You'll be hearing from one of those companies, at least Julie herself is located in the greater Chicago area later in just a few minutes here. But it's really important, I think, again, while we continue to invest in Vermont, we are fully committed to remaining in Vermont and really being a big V Vermont association. We also recognize that it's important for us to be and have a sustained kind of presence in some of these other key markets around the country, all in an effort, again, to make sure that Vermont remains the leading captive domicile and that we continue to drive new licensing activity here in Vermont. So I think I'll pause there and happy to kind of answer any questions or do so at the end if that's more appropriate.
Committee, any questions?
Thank you. Thank you. And sorry, I came in a little bit late, so I missed the beginning, but I guess I'm not sure what you mean by chapters. Like what do you, is it just a social kind of thing, or is there a business aspect?
There's very much a business aspect. So I think, it may be helpful just to kind of share some context. We as an association have, since we were founded, done what are called road shows, where we go and kind of spread the captive gospel all around the country in an effort to bring regulators, bring service providers to areas where captive activity is growing, and to talk about why, if you're going to have a captive, you should do it in Vermont.
Mhm.
And so the kind of thought process here is it's almost a reimagined or modernized take on a roadshow, and that we are still going to Chicago and Philadelphia in an effort to reach a wider audience of prospective captive owners and to tout the benefits of being in Vermont. Yeah. So it is about community and building community in those areas as well. So there is a kind of social networking component to it, which is, again, a core kind of tenet of who we are and what we do as an association, but it is very much educational. We are always joined by the Department of Development, the Department of Financial Regulation, and we show up collectively to talk about why doing business in Vermont is so important. Great, thank you.
The questions? Thank you.
Great, thank you.
Effort. Go.
Thank you very much. I do have a presentation to share. Or I introduce myself. I requested to share. Good afternoon, everyone. My name is Julie Bordeaux, and I'm the president and CEO of PCH Mutual. And I have to tell you, this is a very meaningful moment in my life. I have the utmost respect and admiration for your public service. And I know, and I've been taught through my family and my mother, who was a lobbyist in Michigan, believe it or not, and very involved, how important it is, your service. So thank you so much for that. I really appreciate it. And part of this is, I think, filled with a lot of gratitude, my presentation. So I gave you a little background on myself. This isn't about me. This is about PCH Mutual, which is a risk retention group that was formed in 2004. And it was formed to serve non-medical residential caregivers across the United States. As I'm sure you well know, one of the reasons that captive insurance was created and the Liability Risk Retention Act was enacted was to enable small businesses, which are the backbone of this country. 99% of employers are small businesses. And so they are the greatest employer in the United States. But not only that, but our businesses care the most vulnerable adults. And that's the service they provide. And they were in need of affordable, professional, and general liability insurance. And today there's a greater imperative for that as we see our boomers going over the edge of, there will be more people who are over 65 than who are over 18 or under in this country in a very few years, and they will need care. So we are there to serve them who are our members. And they are all generally small, family owned. We do have some mid-sized assisted living facilities, but they're owner operated community businesses. I can give you the numbers, which I will in an additional slide. But essentially one of our core missions is to serve those who serve the most vulnerable. And we do that by embracing a lot of free member benefits and resources and substantive ones. Not just PowerPoints on how you can give better care, but really substantive things that allow them to give the best care to their residents, because our core mission ultimately serves those vulnerable adults. And this gives you a little idea of who we are. But what I really like to get to more than anything is how Vermont has allowed us to get there. So when I became the president and CEO of PCH, my first act was to re-domicile in Vermont. And I have a great memory of going to my first VCIA conference, a little nervous. And one of my jobs was to interview with the Department of Financial Regulation to see if we were candidates, if we were a match, if you will. And I remember sitting across from David Provost, Sandy Bigglestone, and being quite nervous about the interview and feeling immediately at ease and immediately like the expertise, the professionalism, the authenticity of these people from the top was so tremendous. And that was carried through. Once we became a Vermont domiciled company, David Provost came to our first board meeting, and my board members, some of whom are these caregivers, were awed by that. And it was a tremendous connection. And you feel like this is not your traditional regulator business type of an environment. There's something more here. There's something deeper and richer about this environment. And he conveyed at that meeting something that you did as a legislature and to help our industry. And that was, we were struggling with having enough flexibility in our investment plans. And you had passed some legislation that allowed us to have that flexibility. And we were in need of that then. And so it was a very clear connection between what we needed, the legislature listening, the Department of Financial Regulation, putting it together, the legislature listening, and giving us what we needed, which really tremendously served us. And I can tell you that we've seen this time and time again with Vermont. And so as we've grown, this is just a slide to show you, this is what we look like now that we're in Vermont, and this is where it's gone for us. Membership, our surplus, our premium, we were able to thrive in Vermont. And with the collaboration. And one of the things I really wanted to emphasize was in this time in our culture when it's almost a desert as far as community is concerned, I feel like the state of Vermont is a community. It's a community where business can thrive. And the Department of Financial Regulation is, and of course, the legislature is leading that. And it is showing it and epitomizing it in tremendous ways. So I say no tunnel vision because I visualize them as people with binoculars looking at the horizon and saying, this is what's coming down the pipe. So my story behind that is back when Bitcoin started becoming a thing and blockchain was, what's blockchain? Ian Davis was with he was in his first role, right, at the Economic Development Department. And they put him in charge of studying the blockchain, seeing how it could serve our industry. And I thought, that's amazing. they're ahead of the curve. They're seeing what's coming. They're not reacting, they're proactive, right? And those kind of things that you do as a legislature and that the department does in that way help us to see what a strong environment it is for our businesses and to do business here. Kai Sampson talked earlier today about how you're not the cheapest domicile, you're not the most permissive. I don't want that. I want people who can make us better. We've had 3 examinations under my reign, if you will, and every one of them has made us better as a company. It's not an adversarial interaction, it's a collaborative interaction of how can we take the wealth of our experience, the depth of our knowledge, where we've seen people faltering or on the verge of failing, and how can we help you to not be that company? So I can name everyone: Brianne, Jen, Kara, Stacy, all the people on our examination committee, and they were tremendously helpful. Everybody in the leadership who engages with us and says, what are your problems? How can we solve your problems? And then there are times when we've had exchange where they've asked me, do I have ideas how to help them? So we have engaged creative thinkers, the absolute opposite of every stereotype you have of a regulatory body. And that is another reason why we're in Vermont. I'd like to give you just a couple of other examples. I told you about the legislative change that you made that benefited us. We had a few years ago where you might remember everybody's portfolio was cratered. So all of a sudden, not by any other issues related to claims or other issues impacting our loss ratios, but we were put in a position where we were going to have to be in corrective action. And my first thought was, I have to speak to the leadership and tell them as soon as we saw that coming. And I sat down with Christine Brown and Sandy Bigglestone, and they said, we understand, we know this is coming. And of course, you'll have to be in corrective action because that's the rule. Those are the rules, but we understand and we'll be there to support you. You'll get out of this. And those kind of interactions, the ability to interact with our regulators in that manner is absolutely priceless, for sure. And then the final kind of concrete example of this was we had a problem with we offer evacuation coverage as an ancillary benefit, because I think you might remember the hurricane scene with the elderly folks in wheelchairs with water up to their knees, right?
A couple this year too, with fires.
Exactly, right. And so with the climate change issues, we need to offer evacuation coverage. We want them to feel safe and supported to be able to evacuate before, the storm hits. But we realized with some of these massive events that we might have some major exposure that couldn't be covered by reinsurance. So we put together a plan regarding essentially an aggregate coverage for a single event. And so we had kind of a creative plan that I put together, looked through and drafted with our attorneys, and we presented it to Vermont. And they took time with it. And then they said, absolutely, this makes complete sense. And that was something that they said, it's all right, we can suggest this to other companies if they have a similar problem. So that's the kind of collaboration and the kind of community that you and the department and the Department of Economic Development have put together to help our company truly thrive. And we are tremendously grateful for that. And I am happy to speak to anyone who will listen to me to talk to about the value of that. I have an informal risk retention group, leaders group. We talk about that and the benefits of Vermont. And so it's with gratitude. I wanted to tell you that we bring a little bit to you. I hope you know that, and we want it to be a mutually beneficial experience. So these are, some of the things that we see as what, we can bring to you. I've actually lobbied in Washington on behalf of the BCIA and the captive industry. And that was another wonderful full circle moment, if you will. But please keep doing what you're doing. And the fact that there are longstanding, loyal employees with this kind of tremendous foresight and vision. I don't know, I don't know if you got anything brewing on AI, how you're gonna help, them do exams with AI, but whatever it is, keep doing what you're doing, keep taking the long view, because it truly does benefit us, and we're grateful.
Thank you.
Any questions?
We're grateful. I told the committee to get down here ASAP because you're some of the few people that actually like us. This is the most I've felt liked, and I have been in this building a very long time. And it is good to know that we do something right. I'd like to be able to clone this and move it into other departments. You guys want to take over education? But thank you. I'm glad that we have help. And yes, this is an industry that this year there's been a couple of really bad fires, I think mostly
Yes.
in homes, and it's important
Yeah.
that they have backup.
Yeah. You're in public service for the people.
Yes.
And ultimately, that's what everyone here serves.
Any question?
What's GWP stand for on your?
Gross written premium. It's, some people will say gross premium written or gross written premium.
Yeah.
Yeah. So we like to say we're small but mighty at 15 million, but when I started, we were at 3. So
Oh, wow.
we've really,
Right direction.
we're right direction, but again, proceed with, measured growth. You don't just go for the jackpot in a year. So we, gotten a lot of good feedback on all of this.
Okay, thank you.
Thank you very much for your time.
Thank you. And we will try and not mess with things.
But again, any big ideas, those are good too.
Well, we let those come from the folks that actually know what they're doing. This
think we
is
could
what
use
I'm
little
there.
chairs if you, I think we technically.
Well, no, I think I'm on the
Thank you.
Welcome.
Thank you for having me. My name is Brittany Nevins, and I am the Captive Insurance Economic Development Director of the state of Vermont. And I am in the Department of Economic Development and the Agency of Commerce and Community Development. And I have just some brief remarks, but I wanted to just check on time. Since we're kind of late.
Can you do it 5
Yeah,
minutes?
Yeah.
And I don't know, Ian was the first person to go to economic development, but at some point, DFR came to us and said, we really shouldn't be regulating and promoting. And so the promotion got moved over to economic development so that DFR could just do the regulating, because there is an inherent conflict there. And that has worked very well.
Yes, yeah, that is the current structure. So Ian was not the first, but there was at least one person before Ian.
And I've been here a long time.
Yeah, so we've been having the structure for quite a while, and it's a structure that's been mimicked by quite a few other states at this point, because it does work well. So it's really great to have someone just to focus on the marketing and business recruitment, and not then have to, bring in the companies and then regulate them. It can kind of create some potential conflicts there. So I can definitely keep my remarks brief. And if you have questions that we can't get to, you can always reach out at any point. But I also have some colleagues from the Department of Financial Regulation here as well, who hopefully will give an update, or maybe already did, but I'll touch a little bit on some just kind of high level data points for how we're doing. So we released year-end data this morning, actually, for 2025, and we had 51 new captives licensed last year. So that is our 3rd highest year of growth in our 45-year history. The last 5 years have been top 10 years of growth.
So we are on a very successful trajectory, which is incredible. And that really is due to what we call the four-legged stool of the Department of Economic Development, the Department of Financial Regulation, the association, and the legislative side of things.
And I also understand that because we had a time where we were declining, and it is tied in some ways to whether or not the commercial insurance market is
Yeah.
hard or soft. So I assume that the market is fairly hard right now. I know.
Yes, yeah, it's been a continuation of the hard market, but there has been some softening in some areas, but I think it's pretty interesting. We have had like in 1986 and then in 2001, really big fluctuations because of certain events that were going on. But I do think it's becoming more and more clear that companies are turning to captive insurance as a risk financing tool for the long run. And they're recognizing it as a way to stabilize their insurance and keep costs controlled and to control their risk generally. So it's not as much of a reaction to a specific thing as it maybe once was, and becoming more of a common practice. And that is worldwide. It's becoming more and more common. So so we are doing really well. We are estimating about $35 million in tax revenue, at least again, from the last year. And as you are aware that those funds, they support the whole regulatory program, my role, the marketing efforts, and the rest of that money, which is the vast majority of those funds, go to Vermont's general fund for our most essential programs.
Yes.
And last year we won a National Domicile of the Year award for a fourth year in a row, which is amazing. And although we've had some changes in leadership over in recent years, we had some talking points earlier at the board meeting where Christine was actually talking about how the leadership in the captive insurance division all have 25 years of experience in the department. So even though we may have folks that are shifting, we have a really deep bench of expertise. Also just wanted to mention that there's been a convention center task force that the department's been working on. And so that's great to see, so that we can continue to support the association with the conference that happens every year, which is the largest conference in Vermont. Just wanted to touch briefly on workforce challenges. I've been collecting data the last couple of years, and you may have recalled that from last year, but we're seeing a continuation of some trends that we saw last year. So we have now over 500 confirmed jobs that are available for Vermonters. That's an increase of at least 20 jobs from the last year. So the job growth is growing at the rate of our licensure growth, which is incredible. But unfortunately, the data is also showing that we saw a decrease in 4.5 positions being filled by Vermonters. So what that means is that these jobs are being created, but the skills are not quite in Vermont to fill these jobs. Also, Vermonters are not as aware of the industry. So we're trying to create awareness. So that equates to 4 out of every 10 jobs for the captive insurance industry are being filled by Vermonters. And this puts a strain on the service providers that work in Vermont. And so what we're really focused on is continuing the Captive Insurance Emerging Leaders program with the association. And that is really an effort that's industry-wide to raise awareness about captive insurance as a career path. But we are definitely facing a challenge with the discontinuation of some accounting programs. So, so that's, I guess I'll stop there because it's getting sense.
We have, our next set of witnesses have a hard stop.
Okay.
And we know we can have you back.
Yeah.
And we do have the captive insurance bill.
Yeah.
So we will be hearing from everyone when we take that up. And that's usually not controversial. And I'll try and get it out of here as quickly as we can. It'd be lovely to have something that isn't controversial.
Yeah. I don't typically come to that, or at least I haven't in recent years. But
Yeah.
if you'd like me to join for that and
Or
give more.
we can get another briefing.
Yes, definitely.
Yeah.
Yeah. That sounds great.
Young this session.
Sounds good. Yeah, but everything's going well, but some challenges. That it's good for you to be aware of.
Thank you.
Thank you.
Thank you for your
Thank
time.
you all. I hope you get a chance to enjoy Vermont and then get out of here before it's -13 and it snows. But we can plow runways in this.
Thank you very much.
We got lucky with good weather the last few years.
This is, it's.
Thank you for your support of the program. Thank you. Kyle Jepson, new commissioner for economic development. Invite us back. We'd love to come back and talk about anything you'd like to talk about. Absolutely. Thank you.
Get together soon.
Thank you.
Sounds good.
See the new high school. Oh, I know. It's so exciting.
you need to get it to work.
Okay, that would be awesome.
Yeah.
It's full of
Yeah.
something.
I know, right? Finally.
Maybe it's mention time, so I do.
Yeah. That's next.
The next group is.
Thank you. Bye. Right back. Okay, you're gonna be back cheaper. Apparently.
We got Ed Coyle here once. And they had to be.
When the high school leaves the Macy's building, there's gonna be.
We're short to that.
I don't know what
you want to do with that.
Must be, right?
Yeah.
No, they wanna be different now, that's what they were saying. Yeah.
Okay. Yes, it's you.
To walk to the lake.
You have
Walk to
a
the
lot
water
of
front.
people to
And
start.
they're on.
Yeah,
The ones that are.
Addie is, it's just the three of us.
That's thinking.
Okay,
So you actually have us.
Okay, and you have a hard stop at 2:30?
Yes,
Okay.
sorry about that.
No,
Okay.
we got delayed on the floor and I'm sorry, but you are not gonna love us the way those people love us. This
What?
captive insurance.
You can find out doing what you want.
Yeah.
Well, we're just giving you a little one-on-one, we think, so we think we're telling you what
Nobody
the federal
loves us
impacts
as
are.
much as captive insurance.
Okay, well,
And they also bring
for Medicaid, no one loves that. So
They bring us money.
I don't think.
here, you want this, here, why don't you take the good chair?
Yeah. I just do not come this way.
All right, so we have Addie, but we start with you. Yes, okay. Oh, we're actually. Yeah.
Oh, no, you use cheese.
Okay. Make sure that this one, turn it on. Should I go ahead?
There's Addie.
Great. Good
And it's
afternoon.
already snowing where Addie is.
We all have different Vermont winter scenes behind us right now.
There's some people that have palm trees.
Yeah, some of them are actually in one places. Okay, good afternoon. I am Jill Mazza Olson. I am the Medicaid and Health Systems Director for the agency Human Services. So some of you may recognize me. I've been around this building for a long time, about 25 years, but all in the provider policy and advocacy space. So this is pretty new for me to be in this role. You'll see today that I am really mostly here to facilitate, and this presentation has been done both with and without me, and I'm really not central to it. So I have our expert team members here. And what we think we're talking about is HR1 and the impacts to Vermont. So that's the presentation we have prepared, and we've been to health committees and to appropriations as well. And I'm sorry, few of you have seen it.
We are responsible for health insurance.
Yes.
So
Yes,
that's our.
great. Okay. We're gonna start, Ashley's gonna actually start with some of the impacts that some of them are directly insurance related, some of them aren't, but I think you'll want to hear the whole thing. So great.
And for the record, Ashley Berliner, I'm the Director of Medicaid Policy for the Agency of Human Services. I'm trying to join on Zoom so I can share slides, but I believe we also shared slides yesterday.
Yeah. It's on our website.
Okay, great.
But if we can get,
Yeah.
it helps anyone that's.
I should have talked slightly longer. My intro should have kept going. I have to say, this change to have to do this tech in front of the committee as the witness is a stressful change. I always, it's a new element since my career started.
Yeah.
I can introduce myself also. Addie Strumolo, I'm the Deputy Commissioner at the Department of Vermont Health Access. I'll be doing kind of the second half of the presentation once Ashley's done, when we focus on eligibility and enrollment.
Okay.
And it is joining, but it's taking a second. So I'll just start with Planned Parenthood funding, which is the very first provision in HR one that was put into effect on July 4th, 2025. And it is a provision that prohibits federal Medicaid funding for Planned Parenthood and Planned Parenthood-like entities for 1 year. So this provision sunsets on July 3rd, 2026. And what it means practically is that we cannot claim federal funding for Planned Parenthood or Medicaid for this full fiscal year. There have been many lawsuits. You might have heard the little ping pong back and forth between injunctions that allow federal funding, and then they pause the bar, and then they unpause the bar. And we have made a decision to backfill with general fund during this 1 year period. And while the courts are still going back and forth deciding whether or not the ban will ultimately be upheld, we are sticking with that state general fund. If the final decision occurs that federal participation is permitted over the past year, we'll make sure that we go back and claim that. But because of all the back and forth, we're just sticking with straight general fund dollars. And that's about 1.1 million gross. So both the state share and federal share that we expect in that 1 year. So about $600,000 in federal funding that we're backfilling with general funding for this 1 year period.
And that is my understanding that there are quite a few women in a time when it is hard to get primary care that do use Planned Parenthood as primary care. I think the issue is over abortion nationally, but that is not all that they.
The only service.
Yeah, that is not the only service.
So you got it. Whew. Yes, good job there.
Ah, we're up.
Okay, and absolutely, we really think of it in Medicaid as a critical safety net provider, so we're very happy that we can sustain it during this 1 year period. The next provision that I'm going to talk about is related to provider taxes, and hospital provider taxes are specifically implicated in this provision. HR 1 prohibits the creation of any new provider taxes, and then beginning in November of 2027, it requires existing hospital provider taxes to be reduced from a maximum of 6% to eventually 3.5% in 2032. They are asking states to reduce from 6% by 0.5 percentage points each year until it's a full reduction in 2032 to get to 3.5% overall hospital provider tax. In Vermont, that 0.5% reduction in provider taxes equates to a loss in state general fund of about $18 million a year in today's dollars. Cumulatively, over the course of 5 years, going from 6% to 3.5%, we anticipate that being about $87 million in lost general fund revenue in today's dollars. We're really looking at this carefully to understand everything we can about this and really figure out where our levers lie. This isn't a this year budget concern, but we're really wanting to make sure that legislators are forecasted on what is to come, because this is surely going to be a topic of conversation in the future. The next provision I'm going to talk about is Medicaid state-directed payments. State-directed payment is a term of art in Medicaid that is when Medicaid is required by the state to pay in a certain way. This normally applies to a private managed care like organization. In Vermont, it applies to DEVA, the Department of Vermont Access. So what this means is that on July 4th, 2025, when this was enacted, Medicaid state-directed payments are not permitted to grow and no new state directed payments can be established. They are requiring existing state directed payments to be reduced by 10% per year until they reach 100% of Medicare. So essentially, they don't want any state directed payments to be above Medicare rates. And in Vermont, this specifically impacts Medicaid rates where we are instructed by the state legislature to pay above a particular payment or pay a specific methodology. So we know that the blueprint for health payments around patient-centered medical homes and community health teams are written in statute to pay a certain way. Primary care, I believe in 2024, was established at 110% of Medicare rates. And there are a couple of other payment provisions in statute that require Medicaid to pay in a certain way above Medicare limits. What this provision means is that if we do nothing, those payments will have to be reduced to 100% of Medicare and cannot be any higher. We think that we can comply with this provision with some minor changes to our business processes and how we craft statute and make sure that we're still gaining all the flexibility and able to promote the values of Vermont and make sure that we're funding the things we want to fund in Vermont's Medicaid program and still comply. We're working on what exactly we need to do to come into compliance with this, but we're optimistic that there are things we can do that still promote our values but comply with this provision. It's really just something to flag because we're going to be coming back to the state legislature in the next couple of months, really to talk about things that we think need to happen or not happen when statute is being developed to make sure that we don't fall into some of the pitfalls of state directed payments. And the last one is related to cost sharing, patient cost sharing for the Medicaid program, effective October of 2028. The new adult group or the expansion population under the Affordable Care Act will be subject to cost sharing on all Medicaid services except for services explicitly exempted. And this carves out individuals under 100% of the federal poverty level. So it's just going to be for people at 100% of the federal poverty to 138% of federal poverty eligible under that new adult group. And states will have flexibility to decide what those copayment amounts are. But we have a lot of questions about this particular provision and we don't have answers from our federal partners yet. So we're waiting on regulatory guidance from them on how exactly states are supposed to administer something like this, what explicit services can be carved out. We have a lot of questions, but we're just still waiting on it. We know that the Centers for Medicare Services are focused on other priorities right now. So we don't anticipate getting answers to those questions on this provision anytime soon because the date is so far off. But again, just wanted to flag because it will have an impact in Vermont.
Would this include some preventative screenings?
It's likely that preventative screenings will be excluded.
Okay.
But right now we only have co-payments on a very limited set of services, dental, hospitalization, and pharmacy. So we'd be adding co-pays to everything. Yeah.
Which would discourage people. I mean, where is the federal poverty levels of 15,000 something for an individual? I think that's in the ballpark. So you don't have a lot of spare cap.
Sorry.
At that level. So you might put off your annual mammogram if you've got a $50 copay.
And there are some exceptions that will be written in, and we do know that. We just don't know exactly what they are going to be or how we're expected to administer them.
Okay.
Stay tuned.
Thank you, Chair Cummings. Thanks for the presentation. I feel like one of the things that's happening is that we're seeing some of these devastating cuts. And at the same time, it's being kind of obfuscated and confused by the 195 million rural health grant that we're getting. Are you finding that people are conflating or confusing this and they think that rural health grant is going to fix these problems? And because my understanding is it won't. It's a separate bucket of money that is not at all going to solve this problem.
You're right. It is totally different. So I mostly people have pointed out to me that it's different and made sure that we understand that it's different, which we definitely do.
I'm hearing from like constituents.
That may be.
Yeah.
It is confusing, and the Rural Health Transformation Grant is an opportunity that also grew out of this legislation. It's one that I think we want to take advantage of because it's an opportunity to do things we might not have otherwise been able to do, but it does not impact some of the other things that we're talking about. So they are entirely separate. Yes, we view it as an opportunity to take advantage of, but yes, you're right. There are other problems with it all.
Thank you.
Thank you for that. I have a question, or if we're allowed to ask questions now, back on your, the provider tax, the numbers that you gave, I think, I was looking back at our presentation from The Economist on Friday, and I think the numbers you gave for the impact are higher than what he was reporting. And maybe it's just because you're doing cumulative, but is the 18 million the final year of that? Or is that the first year?
It's 18 million a year.
18 million a year?
Yeah.
It doesn't look like what
Are you referring to Nolan's presentation?
No, I'm referring to Tom Cavet's presentation. And just looking at it right now, I mean, in what year does it start?
It starts November 27th.
Yeah, I mean, his numbers are much more modest than that. At least based on this one chart that I'm looking at, healthcare revenue. So
We'll take a look at that. We have run these numbers, and I know Nolan Langwell and Joint Fiscal Office has kind of a slightly different presentation, but the numbers are consistent with our numbers. So
yeah, and it may
I'm
be
not
just
sure
the way
exactly.
that they're, I mean, but I would really like to know like what the real numbers are.
Yeah.
So if like you and Nolan and Tom could just check the numbers and see what the do you have this presentation? I mean, this is online.
Well, yeah, we'll take a look.
Page 22. Thank you.
So I'm going to pass it over to Addie to talk about eligibility.
Okay.
Thank you. So yeah, as mentioned, I oversee eligibility and enrollment into our healthcare programs, both Medicaid and the Qualified Health Plan Marketplace. So we're the entry point for people to get and maintain healthcare coverage. And this eligibility process is one of the other kind of major levers that was used in the budget reconciliation legislation that we're discussing today. So a lot of the near-term work is with us and our teams here at DBA. We began the work right when the bill passed, including some small pieces that we had to adjust during open enrollment this past fall. And right now we're focused on 3 major provisions that require implementation over the course of 2026 for effective dates in late 2026 and January 1st of 2027. And then there's a 4th work stream I'll mention briefly for 2028. The first change, we can go to the next slide, are changes regarding healthcare eligibility based on immigration status. So these changes apply both across the Medicaid program. They're not specific to eligibility groups within the program. And those changes for Medicaid are effective October 1st of 2026. The same changes apply to the marketplace. So premium assistance to get on a qualified health plan, and those go into effect January 1st of 2027. And what this does essentially is that it blocks eligibility for certain non-citizens, including asylees and refugees, who currently can get on those programs. Our early estimates are that a few hundred members will be directly impacted by this change. It's difficult to identify this population because currently people don't have to provide this level of detail on their immigration status when applying for healthcare. But this is a big area of focus to both identify the population and then work to outreach them as we implement this change. The second major provision is about those Medicaid redeterminations or renewals. That's that kind of annual process where we check to see if someone remains eligible. This is applying not across the Medicaid program, but to specifically the Medicaid expansion population. That's the group of non-disabled adults that are eligible for Medicaid based on their income, up to 138% of the federal poverty limit. We refer to this expansion group as the new adult population. So this will be a change that's effective January 1st of 2027, and it increases the redetermination frequency from what it is now, which is annually, to every 6 months. So it kind of doubles the engagement with the system and the paperwork people have to maintain in order to maintain their coverage. Right now, we have about 55,000 new adults who will be subject to this increased redetermination cadence. The third major provision is what we call community engagement or work requirements for Medicaid. This applies to that same population, the expansion or new adult population, and is also effective January 1st of 2027. So this is a brand new requirement that asks members to demonstrate 80 hours of work per month. It can be work, community service, or education as a condition of maintaining their Medicaid. There are a number of exceptions and accepted populations within the statute, like pregnant individuals, medically frail, those with children under 14. So taking those kind of exceptions into account and looking at our population, we think this change, this need to demonstrate additional standards around work requirements will impact about 30,000 members in our system. So that's the kind of Medicaid story. There's a fourth provision that we are not yet working on. This is going to be a lot of our work once we get past this year. But there's a really significant change coming for the marketplace that we'll have to implement in 2027 for that open enrollment period for 2028 plan year. And this is basically eliminating our ability to do automatic renewals for the marketplace and requiring that people come back and validate all of their eligibility factors before they can re-enroll and get premium assistance. It's a really fundamental change to that whole process. And with this one, we're hoping to get guidance from CMS that either clarifies or kind of softens the statutory requirement, because right now it's really a bit overwhelming in terms of what it will take to make this change. Again, it's another year or so out in terms of our work, and they do plan to issue regulations later this year. So then in summary, I just wanted to say, it's a big project that we have before us, all of these different provisions. We can advance to the next slide, Ashley. And our overall kind of guiding principle with this work is trying to maintain coverage. We want to minimize the risk of, people dropping off, even though this does reflect a lot of really stringent new standards around paperwork and verification and other pieces. So we're hoping to use some of the lessons that we've learned in recent years when we restarted Medicaid renewals after the public health emergency, about ways to outreach people, stay in touch with them, leverage automatic renewal processes and data sources to help people so they don't have to provide that paperwork. But it's going to be a big challenge, and we're grateful in advance for your support as we undertake it. We do have one more slide, but it's just a visual depiction of the kind of the project over the next year. So I'm happy to take questions on any of the above.
Okay, committee questions.
Just regarding this provider tax. My understanding is we collect the provider tax from our hospitals.
and then that provider tax is redistributed back out to the hospitals in some formula. Is that wrong?
That is what most other states do. with
Oh,
property
okay.
taxes. And that is why this provision exists.
Yeah.
It's because most other states do have what they call a hold harmless, where they tax the providers, they match it,
Yeah,
and then they make sure that the providers get all that money back.
right.
In Vermont, this is a particularly difficult provision because we don't have that hold harmless provision. The provider tax revenue goes straight into the general fund, which is just a giant, as you know, a giant pool of general fund money. Some of it surely goes to Medicaid, but it's not a one for one. There's no way to really match the dollars.
I like
that way.
following the electrons.
Okay.
Yeah.
So if we were hold harmless, this would be no big deal because.
It would be a big deal for the hospitals.
It was,
But it would not be a hole in our general fund the same way it is for us.
Okay, got it. Thank you.
There'll be $86 million less in the general fund.
Yeah.
Which will either have to come out of Medicaid, the reimbursement, our share, or some other program, unless we can find about 10 more captive insurance industries to bring in.
I've got a different, later conversation.
I thought the federal law prohibited that kind of like tax the hospitals promise they're gonna get it all back.
They allow it up to 6%. So there's a 6% hold harmless threshold, which is what most states are at now. And they're reducing that from 6% to 3.5%. So they're still gonna allow a 3.5% hold harmless, but we're significantly reducing it.
Oh. Was under the impression that you couldn't promise any of it back. It's aggregate, it's not one to one. You could just use it for, for Medicaid, but you couldn't promise that that specific hospital got that exact amount. Yeah.
Yeah, you know, I'm not aware exactly of all the mechanics in other states. I think different states do it differently, but the idea is that it's a way to, the rationale behind this provision is that states are using provider taxes to bring in more federal dollars and then reusing the Medicaid program.
Right, no, I get that, I understand that, and I think arguably that's what we're doing, but I think that, but I thought that it was, the provision was, you couldn't say, okay, you know, Smith Hospital, we're gonna tax you and you're gonna pay $100,000 in taxes and then we're gonna wink, wink, you're gonna get $100,000 back in Medicaid reimbursements. I thought that was that.
It's in the rates. So it's considered an enhanced Medicaid payment is how they couch it in federal regulation. And so you can have an enhanced Medicaid payment up to 6% held harmless. So it wouldn't be Smith Hospital gets all the money that they paid back, but the enhanced payment would be, it would in an aggregate way add up to the amount that hospitals pay.
Right, so if Jones Hospital has more Medicaid patients, then Jones Hospital might be getting some of the revenue that Smith Hospital paid because they have a wealthier client base, have fewer people on Medicaid.
I don't know. I follow.
I mean,
But
I thought it was, there was a prohibition on a one-to-one, but maybe I was misunderstood it all, so.
Well, I think we should clarify that outside this room, just that, yeah, but I think that what's important is that in Vermont, we are putting the money into the general.
Yeah,
fund,
yeah,
and that
yeah.
For
Yeah.
our purposes, that's really the only thing on the table that has impact on us is that we are going to lose general fund revenue.
And we have at least 2 institutions that do not accept Medicaid. They are taxed. And they get nothing back because they don't take the Medicaid payments. And they have maybe plan. Sure. But
Yeah, but I know what Senator Hardy is referring to. I some of that in my head too, but I just want to, we'll sort it out.
Okay.
Yeah.
That would be great.
Yeah.
I think there was a time when the feds hadn't caught on to what was going on. They did. And then, rather than just say you can't do this anymore, they put things around it. But we did put it into the general fund.
The provider tax isn't a trust tax, right? Sometimes, no, okay. Make it easy, just like.
Okay, questions? You don't feel bad enough already, all right? Okay,
I got one if I missed it, sorry. How does this all interplay with the federal dollars with the rural healthcare monies? Did somebody ask that?
They did.
Oh, good, good, excellent. I can follow up after.
I'm happy to answer.
yeah, go ahead.
It's really separate. So.
Okay.
So this bill did create the rural healthcare fund, but it is really all about essentially one-time investments in rural healthcare. And it has no impact on premiums or co-pays or any of the insurance related pieces that we might find important. So it's a separate opportunity, but it's more about one-time investments.
You can buy computers, but you can't pay the salary for someone to run them.
Oh, cool.
You could buy an ambulance, but you can't pay the agents.
Pretty much, yeah.
Okay. Other questions? Okay, thank you.
Thank you very much. Thanks for having us in.
Be watching. I think some of the worst is not going to hit us for years.
Yes, some of this is us letting you know what is coming, and then on the state directed payments, it's more that certainly want to make sure we don't create more state directed payments this year.
Yeah.
They're prohibited, so.
The committee
yeah.
doesn't do that, so.
Yeah. Right, I wouldn't have to.
Watch us down the hall.
Yeah.
I do have another.
We have eyes everywhere.
I mean, it sounds like a lot of this goes into effect starting January 1st, 27. So you have a lot of work, as you said, to get this all
Yes.
going in the next.
For 18, yes.
And a lot of it is informing patients about what they're gonna have to do. And do you have a budget request to ask for like navigators or people who are out in the community helping folks?
What, how do you speak to it?
Sure, yeah, we'll definitely be talking about that in the context of the budget with an ask. There also is some grant money totally separate from rural health transformation, but specific to the eligibility implementation that we've gotten from the feds that can be used both for the IT and the system changes, as well as the really necessary outreach, member noticing, and various community supports that we will need to implement this.
Okay, and good, I'm glad that you're coming to ask for something to help with that. And the healthcare eligibility or the QHP renewals, how do they have to renew get all of the verification before they even go to sign up for Medicaid? And how does that work?
So that's the one where we really don't know that much yet because we haven't gotten any regulations from the federal government, but that's specific to the qualified health plan marketplace. So the idea is, yes, people would have to validate all of their eligibility from premium assistance before they can get it. Whereas now we just kind of automatically renew people into coverage during open enrollment.
Got it. So there would be a sort of verification. Well, you don't know yet, so
The enrollment verification is what they're calling it. Yeah, so some kind of separate box that you log into, validate everything, maybe follow up with paperwork before we can give you the assistance and the coverage.
Got it. Okay. Thanks.
Okay. Other questions? Thank you.
Thank you.
Hang in there.
Thank you.
This is a great team. I think I said earlier, I'm new to state government and there are some incredibly smart and committed people working on the behalf of Vermonters. So I'm grateful for every day. These two. High on my list.
Good afternoon.
Good afternoon.
Mike Fisher, healthcare advocate. Hello, Steve.
You're ready to.
I decided to just, I didn't come in prepared remarks, given who was coming first. And just to give you just a little perspective of what the world looks like from the healthcare advocate perspective, given everything that you were just told that's coming at us and everything that's happened to us already. So I'll just say, this past open enrollment period was really hard. It was really hard on Vermonters, and it was really hard on, it was hard on the state government, it was hard on Viva, it was hard on the Healthcare Advocates Office, it was hard on our shifts who are set up to help, Medicare recipients. There was a great deal of stress going into it and through it, and I think some really bad outcomes. I am very confident, you know, we haven't yet gotten a presentation from Diva about sort of where did people go in the QHPs, how many do we think became uninsured or left the QHP, we don't really know where they went.
We're waiting for those numbers.
We're waiting for those and they're still crunching them. But generally we know, I mean, I can't walk through the building without somebody saying, I left my insurance, or saying I paid a month and I don't know how I can keep doing it. I mean, like literally today, somebody said, I can't keep doing it. I'm gonna go without insurance starting next month. You know, the combination of the loss of the Part C market and the loss of the enhanced tax credits was a double whammy on offices like ours. Lots of calls from seniors who needed a great deal of time and assistance in helping them know what to do.
Part C,
Medicare Advantage.
okay, that's what I figured it was.
Everything Medicare has to have at least two names so that
I
it
know,
can be
in
confused.
alphabets.
Yes. And there are certainly some people in each of those pools who have no affordable options. I can't recommend that they get coverage. Despite, I want to, recognize that the legislature did some incredibly good movement in help in increasing the program that we have for low-income people on Medicare. The Medicaid-like program that wraps around it. Substantial improvement there, going up effectively to, there's two different levels, but 202% for the federal poverty level. And so that was the only silver lining of the year, because that also went into effect for the first time this January. And so we are now, we've been helping people get into it, and we have quite a bit of work to do outreach to make sure Vermonters know about it. But there are people for whom coverage, there are people in the Medicare marketplace for whom coverage is likely 35-40% of their income to pay their Medicare premiums before cost sharing. And remember, everyone talks about Medicare, everyone pretends to think of Medicare as this great savior. No out-of-pocket max. No lifetime out-of-pocket max.
It was set up in a different time. You had a heart attack, you went to the hospital, and you died within 2 weeks. It was pharmaceuticals were aspirin. I mean, the world of healthcare has just changed so dramatically since Medicare went. It was the debate topic in 1963 in high school.
And then a combination of
Socialism.
Oh, my goodness.
we now have the 400% of poverty cliff again. And, just to, we try to avoid cliffs because we don't want to drive economic decisions based on eligibility. We have a doozy of a cliff today, where you fall over that 400% of poverty cliff, family of four, all four people eligible, we're talking $25,000 of lost tax credits, or more. When you have a dynamic of, you guys know this in tax policy, when you have a dynamic of somebody earning just a couple dollars over, an arbitrary limit, and they lose those kinds of subsidies, it necessarily drives what people do in their lives. That is the other sort of major dynamic that's playing out. And so that all of that, and I want to repeat, I want to sort of emphasize in my office the intersection between immigration status and healthcare policy is a big deal. We are certainly hearing from many Vermonters who are, trying to figure out how the changing landscape affects them there. But as we look forward to what's coming at us, it's really an all hands on deck like dynamic, and I appreciated hearing Addie talk, or the administration talk about wanting to ramp up the efforts to help Vermonters through the combination of the biennial re-enrollment and the work requirement. And I very much agree. I think that's one place where we're going to, the healthcare advocates can put a lot of effort into, if we're going to avoid losing those populations in coverage. We're going to have to do some real work and some real innovative partnership with community organizations to help people just manage the paperwork made. So I feel like I've blah, 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 talking for a little while. And so if you guys have questions about.
I have one question that is just regarding the immigration issue. Can you just give us a immigration 101 vis-a-vis healthcare in Vermont right now, and what it's going to be after this change, so we can see the full picture?
I can't.
In brevity.
I can't. I have members of my team. I have members of my team that would love to.
Okay.
The thing that is tricky about talking generally about immigration status is that there are so many of them, and so the law is particularly complicated, even down to which country you're from, let alone what status you have, and how it plays out in Medicaid policy, and sort of the timeline of when the changes are happening.
How does it start? Have you done any, or been able to do with anyone else, any kind of a calculation that would show, based on all of these permutations and combinations, what's going to be the effect from today to a year from now to a year from then, based on changes that you know about right now?
Particular to the immigration question?
Yeah.
So for that question, we're pretty highly dependent on Medicaid information, Medicaid data about immigration. And I think to be generous to them, they have some challenges in their data around that topic. And that's a bad thing and a good thing, maybe at times. I think that if you had Addie back here and you were saying how many people, she would give you, I think she did, a couple hundred people, I think she had. That, in my experience, that number has changed some as they've done some more analysis. I think that they ask the immigration question, the immigration status question, when it applies directly to the application. And so there are plenty of times where they do ask that question, and there are plenty of times when they don't, because if you go to their applications, so based on their immigration status, or it wasn't thought to.
Thank you. A couple years ago, we created a parallel program, parallel to Medicaid.
Immigrant health insurance plan, or
Yes,
for
for
children.
children and pregnant women.
Right.
And is that impacted, and what's the status of that?
That is not impacted. That is not impacted. It is a state-run program, state dollars only. And the legislature did a particularly good job of making sure that the data associated with that.
Yeah, thank you. We worked hard on that.
Thank you. I remember that. And that has proven to be very important to this.
That was like 4 years ago, just before the time.
It's during COVID, I think. wasn't
Yeah,
it?
yeah. You were on the committee.
Yeah.
You and I were on the committee. Yeah, we
Right,
worked
yeah.
hard to make sure that the data was secure and that it was a separate
Yeah.
parallel.
And so I'll just say another sentence or two about data. Though I think we don't really know what it means, but people should know that there is a court case going through the courts that has to do with Homeland Security's access to Medicaid data. And this is not healthcare data, this is demographic data. And so we all have quite a lot to learn about exactly how that might impact Vermonters. We have in the past been, said very matter of factly that Medicaid data can only be used for Medicaid purposes. And I think we now can't say that. But I'll say again, that IHIP program is not a part of that.
I
And
think we've said the same about SNAP data.
I think it's a
That turned out to not be the case.
very similar dynamic.
You don't sign up with the program because that's my right. I think you do.
Yeah, I feel confident at this moment, or my belief is that Medicaid has not shared any data that would help identify an individual. So that's a good.
We have the questions. Thank you.
Thank you. So quiet, you guys, what did the captain sort of take all the?
Well, no, the captives, I told them it was the best we're gonna feel and
Yeah,
you guys have brought us down to earth with the thud.
Yeah.
this Friday, yeah.
Next time, come and bring some.
Yes, the next one committee, we have a whole half hour for Christmas trips, so we can
Do it.
do
All right, do it.
our reports.
Do the report.
Yes,
Is this
then,
online so we can click on the report?
they are online. I think
Is the report list online?
no, but I can.
Just because it's easy, it'd be helpful to be able to click on the report so we can see it. That was one of the things.
All the reports.
Well, it's hard to just look at a list and decide whether we want the report because it could be like nothing, or it could be a valuable report if we don't see the content of it.
And first one is the Private Activity Bond Advisory Committee report. That gets reported to the E-Board. I've never read it, it's here, I don't feel, but I think the information should be there. I assume it is, so if it ever comes up, we could get it, but I don't need somebody setting it out. And maybe we could do footnotes when we send this in that says, information should be available upon request. And we can say data, that's very helpful. Does anybody need the Private Activity Bond Advisory Committee report?
But it said it expired in 2017, so I don't
Yeah,
understand.
how do you want to read that?
Well, I guess it means, do we leave it expired? Or do we want it retained? It's kept.
I mean,
Does that say what the latest report was? Because I look over here, it says amended in 2012.
I don't even know what that is.
Yeah, I
As far
mean,
as-
this is, I think would be helpful to go through this with our legislative council because
Yeah.
that's,
Don't
I
know what
mean,
any
some
of
of
this
these change.
Well, that's
Yeah.
about 8. We've got till Friday and they're all being discontinued.
That's not true.
I-
This, I mean, a lot of these have to be.
We can always go through and say, oh, Chris is here.
Huh? Good.
Tucker sent this out. Maybe we could ask him to see if Tucker could join us.
Well, I mean, when we did this before.
Yeah.
When I chaired GovOps and these went out, what I recommended to all the chairs was that they have their legislative council attorneys in their area walk through the reports with them to say, this is what this report is. This is why it was created. Do you still want it?
I
Because-
have no idea.
Because some of them are completely useless and some
Yeah.
of them sound useless, but might be not useless, if you know what I mean.
But as long as the information there, if I want to know what got done in the Vermont Enterprise Fund, I can call and say I want it.
And this is actually not even a report. If you look at the statute, Title 32 VSA 994 B3. It is on December 1st of each year shall make recommendations to the E-Board on the allocation, including any amounts reserved for contingency allocations of the state's private activity bond ceiling.
Okay, and that
It's
gets
just-
down to the E-Board.
Right, it's
Why
just a
do we
recommendation, it's not a
say-
report.
Yes, and why are we saying, and it's the same recommendation every year.
And it's one of the treasurers, it's a recommendation from the treasurer. I would say we would still, don't you
Want
still
that.
want that? I mean, it doesn't require that you
Well,
make a
do they need,
report.
I think, why don't we see if Tucker can join us and tell us what this means? Does this mean we don't get it, or does it mean the E-Board doesn't get it?
Yeah, and it doesn't even, I don't even see in here where the finance committee gets it.
Appropriation ways and means, yes, S finance at the bottom.
Well,
Or in fine print.
doesn't say that in statute, unless I'm missing it somewhere. I'm looking at that statute. This is just the treasurer making a recommendation to the E-Board.
Then treasurer should keep making, but it says it goes to us, so somewhere something is coming to us. I've never seen it.
But in point of fact, what all of these things seem to say, if I'm interpreting correctly, at least in most of them, there's their activities regarding a particular program or particular department or
Yep.
action on a particular subject, and it says, you're doing a report. I can't tell here whether these are annual reports or not, although I see dates in which last report and I see dates in which the program has started, but if nothing else, I would think that every program that's a continuing program ought to have some sort of report of statistics as to what they've done and what they've accomplished or failed to accomplish during the preceding year.
I would assume that if it says it expires in 2019, that some committee somewhere said it should continue.
I mean, this form that I'm looking at, frankly, does not give me enough information to tell me whether I want it or not. I don't even know what it is in most cases as I read this title.
Okay, so maybe what Tucker, this is out of House GovOps, not Senate.
Yeah, and it's possible that this report, just using the first one as an example,
Mhm.
was a one-time thing that was supposed to come to finance. It expired in 2017. It's never come to us. But the treasurer still makes annual recommendations and there is no actual report. I wonder if they could have been a session law thing.
Yeah, so that's what we need to find out. So maybe we'll see Tucker.
He's busy this afternoon. It looks like the quickest we could get him would be Friday afternoon.
Well, let's,
And he might say that Kirby or Rick or one of the other attorneys.
yeah, just tell him we are unclear about what these reports are. It says they've expired.
Are they still being done?
Are they still being done?
every year?
And could you also just, maybe you already did, Charlotte, but post it so that then it's easier to click on.
Under today's date.
Perfect, thank you.
Okay. And if we do nothing, they're all gonna go away, and then if we wanted, we could put them back in.
Why don't you check them all and come back next year?
It'll have to go to on a bill somewhere to get rid of them. That's what
Yeah.
they're trying to do, is do a bill and then it will come through the committee.
And then we'll have more time to add.
Yeah, they're just trying to figure out
Here
what
to-
to put in the bill.
Okay, so let's not can cease to worry about that till we hear from Senate governors. In the meantime, though, I think we should have Tucker come in and explain what these are. I mean, we can go look up and see what the report is, but it's not clear if they expired in 17. And does everybody have to say no before they are put out, or just?
That's fine.
No, I was gonna say, it's never just us on here, so
No.
maybe, we let everybody else pick it on.
That's
We
true.
don't seem to have a really strong opinion about getting any of these.
No,
But I certainly don't want unnecessary work done
If
by
you go in and find something you absolutely think we need to have, check that one out. We haven't started in Senate Health and Welfare. We have 13 pages.
well, we've gone over them quickly, but that was the extent of it.
We haven't made any
Yeah,
decision.
no, we have to make.
And I have a feeling we aren't going to by Friday. Okay, so Chris.
Sure.
Come on up. We got feeling really good with captive insurance, and then the two house care bills have totally depressed us. So we need you to kind of lift us up a little bit.
Well, Madam Chair, are you sure the committee doesn't need a break before I start?
You want to take about a,
I'm flexible, so.
you want to take about a 10-minute break?
Sure.
Right.